Hi, Sarah.
Hi, how are you?
Oh, good. How are you?
I'm good. I was seeing that there's people in the waiting room already, and I was like, oh no, did I send her the wrong link? And then
Sorry about that.
I
Yeah,
was off on another screen, so I didn't
I
see.
went to get a drink and uh so I ended up being a minute or two late there.
No
Sorry.
worries. It's somehow turned into a very hectic evening, so I appreciate
Yes.
your time regardless.
How many people were the waiting room just has a couple people. Okay.
Yeah, just two so far.
Okay.
And I think we ended registration with like 130, so
Okay.
should see pretty good numbers. Yeah.
That's good.
Usually get about
Um,
half, maybe a little over half of that.
yeah. They don't all show.
Yes.
Um,
And we're okay with that. They're busy dental students. We do actually see a lot, not a lot, but a good amount of students that go back and watch the recording. So it's worth it.
yeah. So you do look at that and see like who went back.
We do, yeah. We can't see who it was, but we can see the numbers of unique visits. So
Yeah, okay. Sharing my screen here. Mm,
perfect.
There we go.
So,
See that okay?
yep, that looks perfect.
Okay. Do you want me to change my background to not College Ave and have just my wall or
I'm okay with whatever you want to do.
okay.
Yep.
Right.
Um, so we'll go live right at 7.
Uh-huh.
I will introduce you
Okay.
and just do, general, put your questions in the chat, stuff like that.
Okay.
And then I think around 7:30, 7:35, we'll start questions. Does that give you enough time?
Yeah, I can do I mean, I always end up putting too much stuff in here, but um this slide was in the last one, but I don't know if it's necessarily overlap from from 9/4 to today. So I thought,
Yeah.
well, maybe I better tell them this again. I did keep this one in. Here we go.
Yeah, and I do think that that's really good information
Yeah,
to,
okay. I'll keep that one.
yeah.
Yeah, I basically kind of, you know, used my notes from our call and, um, you said that some students might have already borrowed, so I kept, some stuff in here that would be helpful. Like they had a payment pause. I mean, I don't know how many students here are. Can you tell from the registration if there's repeat?
I can't
Not
tell if there's
repeat.
repeat. I didn't actually compare the last webinar to this one, but I
Mhm.
did take a peek and there's a lot of current students.
So they might have borrowed before where they had something in a payment pause. So I
Hmm.
didn't know whether to keep this in. I had written down payment pause from our notes. Um, and I don't think it'll be many people in there, but it's probably good for me to just say it like this stuff, I guess, unless you think it's unnecessary. But
Yeah, I think it's good to mention. I don't know that we have to spend a ton of time on it, but
okay.
I do think it might be affecting some people.
Okay. Same with the SAVE program because it's ended technically. Well, it's in the courts. No new applications are accepted, but there could
Okay.
be some people on the call who
Hmm.
maybe they know about it and they are confused. I guess I just rather go like, okay, here's the gist. Like the SAVE program is here. I crossed it out on purpose in number 6 because you can't technically apply.
Yes, I think
Uh,
that's good information to have.
yeah, because they'll see it out there because it's on the studentaid.gov website, as a plan that's available, a plan, that's there. But it's like, well, yeah, but you can't have it. Sorry.
Right, right. Yep.
Okay, and then they're gonna get this afterwards, is that right? You're gonna,
Yes, well, if you're okay with it, we'll make the slides available on the website also.
can you just change it into a PDF when you,
Yes,
oh, wait, I made one little minor change, my teeny tiny little word change, so I think I'll just email you, um, let me email you this version here real quick.
perfect.
7:57, eyeing up the time.
So then when you're done with your slides, if you want to then just say, we have some time for questions, I am happy to monitor the questions during your presentation. So then I can jump in and say, okay, Kat, our first question is blah, blah, blah. We'll take a few questions and then we usually
Okay,
try to wrap up in 45, 50 minutes at the latest because we start to lose people after that.
sure. Okay, that sounds good. All right, I'm sending you this so you have it for right away afterwards. Um, there you go. And I copied Rachel too. All right. Okay, that should be coming your way.
Perfect. Thank you.
I just made one, there was a word I needed to change on there. Minor, but nonetheless.
Understandable. And is your last name pronounced Del Grosso? Del
Mhm.
Grosso?
Del Grosso.
Del
Mhm.
Grosso.
Yeah,
Wonderful.
thank you.
Okay.
Mhm.
And then while you're presenting, I'll probably turn my camera off so that people are just seeing you.
Mhm.
Um, but if you need anything, just I'm still here. So just, say, Sarah,
Sarah.
can we do something? Yeah, whatever you need, I will be here.
Okay, sounds good.
And then, yeah, we'll wrap up. And then I think we're
Okay,
good.
awesome.
Yeah.
I think you did a great job with the you know, with the title and the description. You're like, how does it know that? I don't know.
Well, it's funny
Chat
because
GPT.
we're writing a new, like a member value statement for ASDA. So I was giving some options that we came up with on our own to our membership council, and they were like, these all sound like Chat GPT. Everything sounds like AI. And I was like, it's just me. I did this one. So I was like, well, they don't know what is AI and what's not. They think everything's AI.
I know these days you can't tell now, right?
Yeah.
Ugh, I know it's a little frustrating, got to be honest with you, but they did a decent job on the one I looked up for you. I was
Yeah.
like, okay, that's kind of
Yeah.
good.
Yeah, sometimes it's way off, but that was definitely better than I could do. We'll give it
Great.
one more minute. Looks like we have 21 in there.
I'm I'm ready when you are if you want to roll people in and if you just so you know whatever you do is fine. I'm ready.
Okay, perfect. I'm gonna move this over, I think. I'm also going to, when I'm reading the opening,
Mhm.
cover, I'm going to have the script be covering this screen. So if anything weird is happening, if you can't hear me anymore or something like that, I won't be able to see you or anybody.
Okay.
So jump in and be like, hey, Sarah,
Okay.
weird things are happening. All right. And then once we're ready, then you're good with just sharing your screen then. Yes.
Mhm. In fact, I'll just share it now.
Perfect. All right, I'm going to let everybody in.
Awesome.
Hi, everyone. Good evening. We will give everyone just a minute to join, and then we will get started. All right. Hello, everyone. Thank you for joining us for tonight's webinar, Smart Borrowing and Savvy Repayment, Navigating Student Loans for Long-Term Success. We'll give everyone just a minute to join. I'm Sarah Murphy, Director of Membership with ASDA. As most of you know, the reconciliation bill was signed into law a few months ago, resulting in several student loan changes for current and future dental students. In response to these changes, ASDA is committed to bringing you timely and easy to navigate information through webinars like this one, as well as email communications and sharing resources online. You can find resources for navigating student loan changes on our website, asdanet.org, and I'll drop that link in the chat in just a minute. ASDA is going to continue to monitor these changes at the federal level and will update you on this very important topic. Before we begin, I'd like to let everyone know that this webinar will be recorded and available to ASDA members through our website. And we'll take questions throughout the webinar. We'll allow for our speaker to address those questions at the end of the session, but you can submit your questions at any time through the Q&A function at the bottom of your screen. We're very excited to welcome Katrina Delgrosso, Head of Mid-Atlantic Campus and Event Development at College Ave Student Loans. She's responsible for campus development in many states. Kat has been in the financial aid industry for over 30 years and was previously at the College Board, Syracuse University, University of Rochester, and in student loans. Now I will turn it over to Kat to discuss smart borrowing and savvy repayment options. Kat?
Thank you, Sarah. All right. Hello, everybody. Thanks for coming in tonight. And I'm going to kick us off here. So basically, I'm going to be covering as the smart borrowing and savvy repayment. Kind of got a good amount of stuff in here for you to hopefully that things that will help you move on and understand a little bit about it, regardless of what year you're in. So I know some students may kind of be on the front end of borrowing. Some are in school now and maybe even towards the end of your schooling. So we have a variety of folks on the call. So I'm trying to make sure that I cover everything that will, be helpful to all of you, regardless of what stage you're in terms of borrowing. So to kick us off, this is sort of like the basic formula related to how you pay for college every year. So I thought this was a good place to start. Like, why would you even need to borrow in the first place? So basically, the way that this works is like you want to exhaust all of your other resources before you go to loans. So you've got your cost of attendance at the school that you're attending or will attend, minus any kind of free money that you get, whether it's grants, scholarships, fellowships, assistantships, anything at all. That's, the good stuff, the free money that you don't have to pay back, minus any amount of money that you can afford throughout the year from income or assets, or, that your family is helping you pay from their income or assets. And then the bottom line equals like the amount that you would need through loans. So, costs minus any free money, income and assets helping to pay. But then at the end, students typically need to borrow loans after all that stuff is exhausted. Okay, so what types of loans do we have? The types of educational loans that are available, I work for a private student loan company. I work for College Ave. But what you also have available to you are the first, few bullets that are listed here, which are federal loans. So there's federal subsidized loans, that's undergraduate programs only. Federal Parent Plus loans are for undergraduate students as well. And then the federal unsubsidized loans are available for both undergraduate and graduate and professional level. The federal Grad Plus loans are available, but only for those students who have taken out loans on or before, or excuse me, prior to July 1 of 2026. So if you're going to be a new borrower, July 1, 2026 or later, where your loan will disperse after that date, you won't be eligible for that program, which is a big part of what the One Big Beautiful Bill Act included, which is, kind of a little bit problematic in terms of affording college. And so you will likely have to look at private loans to help you get through dental school or, any of your schooling, basically at whatever level you're in here. So private loans are available to those students who did borrow a Grad Plus loan, but a lot of students ended up taking the Grad Plus loan because it was available, it was kind of easy to get, that type of thing. But the law has changed. And so if you did not take out a Grad Plus loan prior to July 1 of 2026, then you will not be eligible to borrow it from that point forward. So it's only taking on like repeat borrowers, essentially, students who have already borrowed it in the past. Okay, so, and I'll take questions on that later as well, once we get cooking here. Sarah and I, in a little while, maybe half an hour, we'll have some question time. All right, so please put your questions in the chat for her, and then I'll be able to help out with some answers. Okay, so these are the dollar amounts that are available. So I had to specify in here the July 1 of 2026 columns because that is, again, part of the One Big Beautiful Bill Act, One Big Beautiful Bill that turned into an act, turned into law July 4th of this year. So you've got your annual amounts. Those are the kind of the columns you see in the middle section to the left. The aggregate would be like your totals that you can borrow as a student over time, over the course of time. So the aggregate's kind of on the right columns. The annual you'll see there in the middle to the left area. Okay, so if you're, so I'm going to point out a couple of things here. The things that really kind of changed are that at the, if you go down to the 1, 2, 3, 4, 5th row, you can see that any new borrowers who have not borrowed previously a federal loan prior to July 1 of 2026, the maximum that you can take out as a professional student, if you're in a DDS program, let's say, is $50,000 annually through the graduate unsubsidized direct loan program. If you are not in a DDS program, but you're doing something else within dentistry, you would only be able to take out the graduate direct loan program, which is a maximum of $20,500. Okay, so there are specific definitions of what a professional student is, and so it's very specific as it relates to this One Big Beautiful Bill. And so therefore, if you're not specifically in the DDS, I think I actually have that on my next slide, do I? No, I may have it on a different slide, but nonetheless, basically it's, if you're in a dental program that is, get this back up on slideshow here. If you are in a dental, like let's say you're looking to be a dental hygienist or you're something like that, but you're not looking to have like a DDS when you're completed, then you would have to borrow through the graduate level loans as opposed to the professional level loans. And so the annual amount is significantly different, 20,500 versus 50,000. The other thing that is pretty significant as it relates to the One Big Beautiful Bill is if you go over to the right-hand side here, the maximum amounts that you can borrow, the aggregate limit is $100,000 for graduate level versus 200,000 for professional level dentists. So there is a distinction there. So make sure that you kind of understand, okay, whatever your program is within dentistry and the path that you're taking, how you will be defined within these two levels, because that is a big change from where we are today. Now, this is a very good time for me to repeat myself. I'm going to say this probably a couple of times tonight, is that if you have previously borrowed a federal loan prior to July 1 of 2026, you will be grandfathered in. So you will be able to take the old numbers that you see in the left-hand side of each of those areas. So for annual limits, you're going to be able to do what the current borrower column says for both annual and aggregate. Okay, so again, if you are currently a borrower in the federal loan program, in whether it's an unsubsidized loan or a grad plus or whatever, you will be grandfathered in up to 3 years. So 3 years basically. So you would be able to borrow for 26-27 academic year, 27-28 academic year, and 28-29 academic year. Okay, so the grandfathering in is really important to note, and it's going to help you to afford the rest of your program. If after 3 years you're still in school, then the grad plus loan will not be available to you, and you won't be able to, you'll have to go with the new limits that are listed here in the right-hand side of the columns. But again, you do get 3 years as long as you've been a borrower prior to July 1. So I'm just trying to reiterate that a couple of times here, just because it's, I don't want everybody to panic, because if you're already a borrower, then you get to be grandfathered in. If you are not if you don't have any federal loans yet until after dispersing it until after July 1 of 26, you do you fall into that new borrower realm, and you got the new limits that are set from the One Big Beautiful Bill. So this is, I covered some of this on the September 4th webinar, but I just wanted to make sure and reiterate it tonight, just because it's so important, especially for dental students who have a lot of borrowing needs. The other last thing before I move on from this slide is the lifetime borrowing cap on the bottom right-hand corner. There wasn't one before, and now there is going to be. So $257,500 is the most that you can take out over the lifetime with all federal loans. So that's for the new borrowers, not the current. Not if you borrowed before, then you're still grandfathered in. But for any new borrowers, $257,500 is your cap. Okay, so what's going to happen if you need more money than that? Let me reiterate what the difference is between federal loans and private loans. So I did cover this on September 4th, so I'll go through it kind of briefly, or kind of quickly. But federal loans, the money's coming from the federal government. Private loans, the money is coming directly from like a bank or a credit union or a private lender like College Ave, where I work. For federal loans, you have to apply using the free application for federal student aid, which is the FAFSA. There's credit worthiness in there for the grad plus loans and the parent plus loans, but it's not much. It's quite limited on what the credit worthiness is, that you need really. Whereas on the private loan side, there's no FAFSA required. You don't have to do the free application for federal student aid, but you do have to run through a credit check. And there is, we do underwriting basically to determine if you're approvable or not. You can apply by yourself or with a cosigner. Certainly the cosigner will help you get approved more so than if you apply by yourself. But we do look at credit worthiness in the private loan side. The federal loans have a fixed interest rate, whereas the private loans offer fixed and variable interest rates. There are origination fees that are charged on the federal loan programs. Whereas on the private loan programs, like we don't have any origination or application fees. So when if you requested, a $25,000 loan, you would net a $25,000 loan at the school that you're attending. Whereas on the federal side, when you apply for a $25,000 loan, it's the amount that you net at the school is $25,000 minus whatever the fee is for those programs. The funds are dispersed directly to your school for both programs, federal or private. And then for private loans, often they have co-signers. It's not always a requirement or anything, but it's often they're there, and it gives the student a chance to have maybe even a better interest rate and everything. So a lot of times the co-signer actually will help the application get approved, but also to get you a better rate, better deal on it. So, it depends on what you have available to you and what you can do. And we do have loans available for like parents or sponsors, somebody who might want to borrow on your behalf as well. If you wanted, we also have that type of option. And there are some options in the industry that other lenders that offer that too, here and there. But College Ave definitely has like a parent sponsor loan. Okay, so briefly, we do have special benefits from College Ave for ASDA students. So for our, pardon me, a little bit of a cold, so I apologize for any of that you may hear through this. Our dental school and our undergraduate student loans, we have unique benefits for you on those. We have a 0.25% interest rate reduction for those loans. We have a 1% principal balance reduction after graduation. We also do a 0.25% interest rate reduction for auto debit payments out of your checking or account when you hit repayment and you want it automatically debited from your checking account or savings account. We give you an extra bonus for that as well if you do it that way. And then we have a cashback rewards program through PACE. It's called PACE Rewards. So we have a specific portal here for you to apply for those programs. And, like Sarah said, this presentation will be available to you. So you'll be able to click on the links once you receive it as well. Okay. And then a couple other things about the dental school loan. We have our dental school loan allows you to borrow up to $150,000 at a time. The total loan maximum for all federal and private loans all put together in there is $500,000. So that's the most that you could take out through the multiple educational loan programs. And we give you a 12-month grace period after college. And then we give you up to 2 more years of deferment for just as you're, getting on your feet, maybe starting your own business, your own shop there. Or just, in general, we give you an extra up to 24 more months deferment if you need it as well. Okay, and then the repayment plans for the private loans, we offer 4 different repayment plans for the undergraduate loan, the graduate loan, and the dental school loan. Basically you can either pay immediately, like principal and interest while you're in school, or you can defer the whole thing while you're in school. And then we have 2 things in between. One is you can pay interest only during school, or you can pay $25 a month if you think that, that's doable. I could eat 1 less pizza a month and be able to afford that. Either way you slice it, no pun intended. Either way, if you pay anything during school, it's only going to reduce the total cost of your loan over time. So it'll help you, even if you can afford $25 a month, it'll reduce your overall cost. So that's a good habit to get into, is to pay even just a little bit towards your federal or your private loans during the in-school period. And then lastly, on this slide, we have that parent sponsor loan where the 2 repayment plans we have on that is either interest only during school, or you can pay principal and interest back immediately. But a lot of families, I think, probably choose the interest only for affordability sake anyway. And again, that doesn't have to be a parent. It could be like a grandparent or a spouse, aunt, uncle, whomever, who's applying on your behalf. The lengths of time that we offer to repay your loans are up to, basically 5, 8, 10, or 15 years on our undergrad and grad loans. Those are the programs where you're not in a DMD or a DDS program. If you're in a dental, if you're taking out our dental school loan, though, you would be enrolled in a DMD or a DDS program, and we actually give you up to 20 years to repay that loan. Specifically, the parent sponsor loan allows you anywhere from 5 to 15 years. So you can pick, or the person who's borrowing on your behalf would be able to choose, like, okay, I think I'd like 9 years, or 11 or 6, or whatever. Like, they can choose anything between 5 and 15 years to repay. Okay, and now I'll talk about the federal loan repayment plans. So if you borrowed a loan before, a federal loan before, you can look on the left side. You have the option of borrowing either through the standard repayment, graduated. I think I forgot one on here, Sarah. I got to send you this a revised PDF so you can send it to the students after this. There's another one in there: standard, graduated, extended. I forgot to put extended on here. Income-based, income contingent, and pay as you earn, which is PAYE. There's a sixth one. There's another one there at the end, but I've crossed it out because it's not currently available. It is currently in courts in an injunction, basically, and there are no new applications. But it's called SAVE, and you may have heard about that out there in the world, on your campus or whatnot. So it's not available. But I put it there because it's technically on the studentaid.gov website as a current repayment plan, and you really can't borrow through it anymore. It kind of ended this year after the Biden administration left office. The right-hand side are the only two repayment plans that are available to you if you are going to be a new borrower on or after July 1 of 26. These are from the One Big Beautiful Bill. So the standard repayment plan is allowing you to borrow. Well, actually, I'll show you on the next slide or so what the specs are on that. But basically, there's only two plans that are coming up. If you are a current borrower, you do get grandfathered in, where you can keep what's going on the left-hand side. And you can have more options available, at least until July 1 of 2028. So they're giving you a couple of years of a buffer to be in any of those left-hand side plans if you've already been a borrower before. So as I said, Sarah, I will send you a revised deck because extended is another option in here I forgot to put in. Okay, so if you happen to have already been enrolled in the SAVE program, great. I'm leaving this on here just because those students who are on the call who may have, if for some reason you had a loan that was already in repayment and you were paying on it and now you're going back to school or something like that, the SAVE plan, you might be enrolled in that already. But if you're not enrolled in this already, you can't get in, unfortunately. I just wanted to summarize what it is. So it's basically really like the cheapest plan that was out there forever. And some students didn't even owe any monthly payments because it was based on their the monthly income, or excuse me, the monthly payment was based on income and family size. It was looking at the poverty guidelines, the USDA's poverty guidelines to determine whether or not you'd qualify, for what your payment amount would be. And so some students ended up with 0 monthly payments. Excuse me. Unfortunately, this program has been stuck in the courts, and the One Big Beautiful Bill is basically putting this repayment plan to bed. So unfortunately, it is dying on the vine here. But for those of you those students who are on the phone who may have been enrolled in it, I just wanted to kind of put it in here to show you that, yep, you might have this, and that's great. But it's not going to be available for the new borrowers, unfortunately. These are the specifics of the new repayment plans that I mentioned that are coming from the One Big Beautiful Bill. So there's only the two. Standard will be, you'll get to choose between 10, 15, 20, or 25 years. Again, these are the federal loans, not the private loans. So these are your like federal unsubsidized loan. And well, that's basically it. The federal unsubsidized loan program that you would need, or that you'd be using, at some point in school. The repayment assistance program, or RAP, is the second program, and that is where the monthly payment is either it's 1 to 10% of your income. So it actually happens in increments. So for example, if your AGI, your adjusted gross income is what AGI stands for. So when you go to file your taxes, your adjusted gross income is kind of like, on your tax return as before your taxes are determined. It looks at like your adjusted gross income on the tax return to kind of get to that next step of how much you owe the government, the IRS. So let's say if your AGI is $100,000 or more, which a lot of you, that will be the case because you'll be making good money as dentists. Your monthly payment on that will be 10% of your AGI. So if you're, let's say you're making between 60,000 and 70,000, your monthly payment would be 6% of your AGI. So it's all broken up fractionally. So it's like in increments of 1, 2, 3, 4, 5, 6, 7, 8, 9, 10% of your AGI. That's what the monthly payment is. So it's basically it gives you, they're going to let you pay up to 30 years, but then the rest of the loan will be forgiven after 30 years, which is, a nice thing after a 30-year period that you would be able to have your loans forgiven, but it's still 30-year repayment. I mean, it's basically the length of a mortgage. But it will help you if you are borrowing a lot and it's stretching out that far. It'll go away. Anything over that will go away after 30 years. So I do have the link here for current borrowers, those repayment plans that I mentioned back on this slide. So, if you want to take a look at the current plans versus the new plans are not really listed yet on that studentaid.gov website that I have linked there, because that was just from the One Big Beautiful Bill. So I noticed it's not really updated yet. Okay. There's also public student loan forgiveness. So after 120 payments or 10 years, your loans can be forgiven. You have to be employed by a government or one of the many nonprofit organizations that are listed on the website. So I have the link at the bottom. And you're welcome to go and look and see if there's certain employers that will allow that you could work for, that would allow you to, do what you're interested in doing, but still be on a path for loan forgiveness. Now, the public student loan forgiveness has been out for a while, in the country. I don't know if it's guaranteed to always be there, but right now it's still available. It went through the big One Big Beautiful Bill Act process, that the law and everything. So it does still exist. So, by all means, if that's a path that you're looking to take a look at that list of employers and see if that matches up with anything that you might be heading towards, and then you might be able to take advantage of this. Also, if you had any loans that were in repayment during there was a period of time with COVID that the federal loans were on a payment pause. So if you had any federal loans during that time, the interest wasn't accruing for over 3 years. And then basically it was allowing people to just kind of take a pause and not have to pay anything. That did kind of, repayment has now kicked back in starting October of 2023. So if you are one of those people who had loans during that time, you should be paying your loans at this point. You'd have to reset up auto debit and that sort of thing. So if you've been in any kind of forbearances or anything like that, like the payment pause is pretty much, like we're beyond that now. But there could be somebody on this call who had some loans that they did have active during the payment pause that were basically kind of laying there dormant. And interest has begun accruing for quite a while now on those. And then moving on to just sort of setting yourself up for success with taking out loans and taking on debt and in general. I wanted to give you a couple of hints, quick tips on some things here. So, Sarah and I were kind of talking about things that might be of interest for you tonight. And this was definitely something that we thought might help. So one thing is that just to know, like, when as a consumer in the United States, like all of the activities that we have, like all of our addresses, any credit cards we've taken out, any loans we've taken out, they all show up on a credit report. Credit reports are there are 3 different credit bureaus that have credit reports on each of us. They should match more or less. These are three competing companies, basically. Every now and then you'll find some differences between them. Lenders usually they'll use one as a primary one. So let's say you were going to go apply for a car. Maybe they use Experian and they use like Equifax as a backup. College Ave, we use Experian and TransUnion as our backup. So depending upon what companies use for a mortgage or a car or whatever, you'll want to make sure that all of your information is correct at each of the 3 bureaus. And in order to do that, you can pull a credit report for free. You can actually do it weekly if you wanted to at annualcreditreport.com. That is the legitimate site that is there for you to pull. You can do it all at once, one after another. So you can log on, request to pull your credit report, and you can actually do all 3 at once while you're sitting there. That's how I do mine. And then I would recommend looking at your credit just to see if there's any errors on there, just to get a sense as to what what does your credit look like? The FICO scores that are calculated on there, there's different scoring mechanisms, FICO score, Vantage scores. But in general, you want to kind of just check for the wellness or the health of your score. Because it does dictate whether or not you'll be able to get a loan for, starting your own business, getting a car, getting a mortgage, getting even an apartment. Sometimes landlords are checking, a lot of times nowadays, are checking your credit to see if they're willing to even have you rent from them. So this is super important for you to set yourself up for success, is to check your credit reports to see, okay, what am I looking at here? And like I said, you can look at these weekly, but I would suggest every 6 to 12 months that you're pulling them, just to make sure everything looks okay and that there aren't any errors on there or any kind of fraudulent issues that are happening. Credit scores range from, basically 300 points to 850 points. And so some of the lenders that look to approve you for things like mortgages and cars and for, in my case, private loans, we're looking at, probably more well, it depends really on who it is, but what it is it's basically a predictor of the likelihood that you're going to pay us back, or that you're going to pay a credit card back, or a mortgage company and that sort of thing. So everybody uses kind of their own standards as to, okay, we're going to approve anyone who has a score over X. Some folks will places where you're applying for credit in some way for either a credit card or car, mortgage, whatever, private loan. They're looking at, at least the good to excellent category. Sometimes it'll go into the fair category. It just depends on what the credit, what it is you're applying for. But the better credit you have, the better interest rates you'll also be able to receive, and the less you'll pay over time. in terms of total indebtedness. So for, again, this is not federal loans here, but this is like private loans, cars, credit cards, anything you apply for in your lifetime that, requires you to take on, like a loan, essentially, you're borrowing and that you'll be paying back. Um, it's everything is really, this is like a photograph of your life that you're kind of it's really important that you watch over this as you're getting out of school and moving ahead. Adding cosigners certainly can help you get better results with pricing for any kind of credit. And while you're in school, I would suggest building good credit and budgeting habits. The earlier you start, the better off you're going to be. So one thing I do want to say, well, I did want to mention this, but I'm going to skip that for just a second here, just to say, wait a minute, what slide is it? I'm sorry. Just want to skip to some, right here. I would suggest also using like a budgeting app, like YNAB or Every Dollar or Rocket Money, Good Budget, Nerd Wallet, something that your bank might offer to keep you on track so that you are doing this. Kind of all translates over to your credit and have building good habits with how you spend your money each month with your income, and paying your rent, your utilities, your food, your student loan payments, everything, Netflix, all your cell phone. Getting into good habits with budgeting will also translate also with you building your credit, because you're going to build good habits. One kind of connects to the other. So I would recommend a free tool if you can, or at least a low cost app that might offer you a little bit more gusto if you pay for something, but I wouldn't pay a lot because there are free apps here. So if it's charging you something, I probably wouldn't pay too much on it because you can get it for free as well. The other thing, and I know we kind of wanted to make sure we allow a lot of time for questions, so I'm trying to hurry because I know we wanted to kind of stop at 25 of. Federal loan default, I want you to just be careful that you don't go into that direction. You'll be getting information before you leave school from your financial aid offices at the colleges or universities about, they call it exit counseling. It's a federal loan requirement. So if you took out any federal loans, you're going to have to go through exit counseling. And they're going to tell you this stuff too, related to, you never want to get into a point where once you leave school, if you have trouble repaying, always contact the lender or the servicer, because you don't want to get into the point where you're entering, you're in a point where you're not paying the loans for quite a long period of time, because then it will affect your credit report in a negative way that will be on there for many, many years before it kind of rolls off of your credit report. So you don't want anything bad going on there because it kind of sticks for many years to come. So I'll just leave it at that for the federal loan default slide, but I just, you'll get more information when you leave school as to what that all means. But it's in these slides as well for you. Just trying to, like I said, set you up for success. Avoiding the bad stuff is what the purpose of this, these two slides are all about. Keeping good records, making sure that you're kind of organized from day one. If you weren't really organized with this and you're kind of on the middle or tail end of school, don't worry about it. As you're leaving school, you can still get organized before you have to start repaying your loans to figure out, okay, who do I owe? How much did I borrow? Who am I paying back? Those sorts of things. Make sure that you're paying attention to your mail, your texts without clicking on scary links. And notifying your lender if your name is changing, your address is changing, documenting calls to your loan servicer just to kind of cover yourself if there's anything to dispute, those sorts of things. And then reducing your total cost of loans. I would try to pay interest during school. or during your grace period, because it's only going to help you just tick that number down in terms of how much you're paying overall. You'd be surprised at how much you can save just by doing little bits, $10 extra a month, $20 extra a month. It could end up translating, because you're borrowing a lot of money as a student. It could translate into hundreds and thousands of dollars over time, because it's really shrinking the length of time that you're having to pay it back as well. So try that. If you needed a private loan, beyond the federal loans, many private lenders, including College Ave, we've got a bunch of those discounts I showed you on that one slide. Many lenders offer discounts in some way. College Ave happens to be offering you extra discounts because of ASDA. So definitely take advantage of those. Trying to pay extra, I said already, paying more than the minimum, possibly refinancing on your loans later. And then I think lastly, just some last bit of advice here on paying off your debt. There's two different main methods that are talked about a lot if you look this kind of stuff up. One is that you can pay down like your highest interest rates first, whether it's credit cards or student loans. That's called the debt avalanche repayment method, where you're like plugging away you're paying the minimum payments on the rest of your stuff, but you're plugging away at the highest interest rate first. So it saves you the most money over time because you're plugging away at those highest interest rates first. Whereas the snowball method is, okay, I want to have the peace of mind to get rid of like a $500 credit card versus this $5,000 loan. So I'm going to like keep putting any of extra money towards the small balances first. That way, when that's paid off, I feel like, wow, that's awesome. I got rid of something. And then go now to the next smallest balance and so on. You don't save as much money as the first method, but it helps you kind of mentally like get rid of stuff. So these are two well-known methods of paying down any kind of debt, whether it's credit cards or any kind of loans, basically. And then these are just some final tips, creating a budget, paying a little extra a month, which I've already said, making payments automatically so you won't forget to make the payment. You just, set it and forget it. If you fall behind, make sure you call for help, asking your loan servicer, hey, or your credit card companies or whoever they are, hey, I'm falling behind. I'm not, is there anything you can do to help me to get, do you have a forbearance option or where I can have a little time to get on my feet, that type of thing. Building an emergency fund for like, if you get a flat tire, you're going to have enough money to spend to pay to get a new tire or two in your car. Having a small emergency fund is always a good plan. Beware of scams. There's a lot of fraud going on with text messages and phone right now. So be very careful of that. It's getting worse. I don't know if you've noticed, but I have. And then just, keep in touch with your loan servicers. Oh, Sarah, I forgot I put this one in. Okay. Lastly, I promise, and then we'll take questions. Good versus bad results. Student A versus student B. So basically, student A had a lot of great habits. They borrowed the same amount as student B, but in the end, they were able to, by doing things a little bit more frugally, than student B, they were able to, buy a house at a decent interest rate. And while living like a student while in school, they were able to live like a dentist after school. Whereas student B, buying a Starbucks coffee daily after, during school, eating out every day, no idea where their money is coming in or coming out, had a bunch of credit cards with a lot of utilization, credit limit being used on there, maxing out loan eligibility, deferring all their principal and interest payments, buying a car that was maybe out of their range, not able to buy a house and they're 33 years old. lived like a dentist, lived like a dentist while in school, and now lives like a student while a dentist. So that's kind of an old time story from my career, I guess, that I've witnessed students kind of heading in those directions. And so we want you to be student A so that you can have great success when you get out of school and you know feel good about it. So all right. So Sarah, where are we here with our questions?
Yeah, we've got some great questions.
Okay, good.
So, our first question is for the Grad Plus loan, is there a certain dollar amount you need to take out before the summer of 2026 cutoff in order to be eligible for, excuse me, any amount the the future years? Or could a student borrow less than $1,000 before the cutoff, then borrow a larger amount in the subsequent years?
The latter of the two. So there isn't a dollar amount. It's just whatever your financial aid office can certify. So if, as long as you have enough room to borrow, like cost minus other financial aid is how much you can borrow. So even if you borrowed, less than $1,000, that would be considered, and it just has to disperse before July 1st. Then you'd be able to technically it would be fine. So there is not a dollar amount requirement.
It's a great question.
Mhm. I know, because this is like one of those things where we were saying that when the law passed, we're like, well, why don't students do this? Maybe that would be, if they're eligible to do that, or maybe swap out like some of their unsubsidized loans, they can take out a grad plus. If there's no room left in your budget through, the financial aid office, talk to them about, can I maybe do a grad plus to swap out some of this year so I at least be grandfathered.
Our next
Believe me,
question,
they know all about this, so they're all on top of this topic. They're
so
they're well
resources and
aware.
options is what you're saying.
Yes, ask financial aid if you want to try to do that. Yeah.
What repayment plan for borrowers before 7/1/26 is the most similar to the SAVE plan?
Um, that's a good question. So what you would want to do is go to um, studentaid.gov and go to loan repayment plans. Okay, and then here are the repayment plans. The most, so basically, I'm going here so you'll just get a visual. The ones that are the closest to it are any of the income-driven repayment plans. So there's there's three others of that. So income-based, income contingent, and pay-as-you-earn. So the SAVE program is 10% of discretionary income. So the one that's closest, pay-as-you-earn is like this. SAVE basically was to replace pay-as-you-earn. So that was like the most recent behind SAVE. The IBR and ICR, which is income-based repayment and income contingent repayment, were like older plans. But those are like 10% of discretionary income too. So I think probably IBR or pay will get you to the 10%, which is similar to what SAVE is. So IBR or PAYE, pay as you earn.
Great. Our next question is, if I am not currently a borrower, but plan to be before July 1st, are there windows when I need to apply? For example, before spring semester or summer semester?
We have to, so you have to base it on what college you're at, because some colleges will use like the summer. I don't know if they meant that they're going in the summer, but maybe. If you were a student, let me say it this way. If you're a student this spring of 2026, then you should be filling out the 2025-26 FAFSA to get a loan in the spring. If you need a loan for summer of 2026, then you will need to do the 2025, 2026 FAFSA as well, because July 1 is kind of like the kicker. So if you want any kind of aid before July 1, you'd have to do the 25, 26 or the current year FAFSA. So just make sure you're doing that. You can do that right now because that FAFSA has been out for over a year. So that one is good through June 30th. So definitely do that. And then your loan, if you're trying to get grandfathered in, you would have to have a loan made, which basically means dispersed prior to July 1 to get grandfathered in. So you would have to be enrolled in the summer before July 1 in order for that money to disperse before, so you can get grandfathered in as a legacy student on that.
Great. Our next question is from a first-year dental student. If I wasn't offered a Grad Plus loan in the fall of 2025/spring 26 semester, but I took out federal unsubsidized loans, can I still take out Grad Plus loans later, like for summer 2026 and beyond? Am I still considered part of the grandfathered group?
Yes,
Great.
that is how we understand the law at this time. Yep. That it doesn't have to be that you borrowed a Grad Plus loan before, it just you had to borrow a federal loan before, and you have in that description.
This one is on loan forgiveness. For PSLF, do you need to be employed by the government or nonprofit for the entirety of the 120 months? If not, do payments made while enrolled in school count towards the 120 months, or do they only start counting once you have a minimum monthly payment due?
I'm going to defer on that one. I'm going to defer you to ask the loan servicer on that because I am not the expert on public student loan forgiveness and I don't want to misquote. So here's my suggestion to you. Go to, if you don't know who your loan servicer is, go to studentaid.gov, click on loan repayment, and click on who's my loan servicer. You can see here that there's a button here that says find my servicer because there are multiples of them. 1, 2, 3, 4, 5, 6, 7. Find who your servicer is and contact them and ask specifics because they are the experts. There's a lot of nuances with public student loan forgiveness, and I don't want to mess you up by giving you the wrong information. So that would be my best advice. Sorry about that. I don't want to send you down the wrong path.
All right, last two questions. What advice do you have for negotiating the best rates for private loans for a dental residency program? I already hit the maximum 200,000 for federal unsubsidized loans during dental school.
Okay, so maximum 200,000. So if you're in school, then you're going to get grandfathered in. So technically the 200,000 doesn't apply to you. Your aggregate is 224,000. So there's that. That's on the unsubsidized graduate, unsubsidized, let me say it again, unsubsidized direct loans. 224,000 is your aggregate, and Grad Plus didn't have an aggregate before. So you may not have already hit your aggregate, but I'll still answer the question, but I'm thinking you may actually not be at your max because as the student who's asking is obviously a current borrower, which means they're going to get grandfathered in. So they are not falling into the new rules. So you might have the good fortune of, having enough through the federal programs. However, if you do need a private loan, my best advice to you is you can pre-qualify on lenders' websites, some of them anyway, College Ave included. So if you go to like College Ave and click on like the under student loans and you click on um, the graduate loans and then dental, let's say, you'll see here that there's a pre-qualify button. We have that on every one of our programs. This would allow you to have a soft credit hit without having a hard credit hit. I just realized I might not be sharing my whole screen.
We're
Um,
still seeing the PowerPoint.
oh my goodness, I've been showing studentaid.gov all this time. Um, this is the College Ave site, so graduate loans, dental, and then clicking on pre-qualify. So any lender that has a pre-qualify button there will allow you to shop around a little bit and understand like, okay, I'm kind of getting the gist of I'm getting approximately an interest rate range of this over at College Ave. I'm getting an interest rate range of this over at lender B and lender C. And then you can kind of sense as to whether or not you want to apply through one of those lenders. You could do it. That's my best advice is to try the pre-approved part because then nothing is happening to your credit score. It's just what's called a soft credit hit as opposed to a hard credit hit. A hard credit hit will affect your FICO score. And now that I realize I'm sharing my screen, this is what I was talking about under loan repayment. Who's my loan servicer? Sorry about that. Didn't realize I wasn't sharing my screen. Find my servicer is who I was the student who had that question before, and this is what I was trying to show you.
And our final question, does
Mhm.
College Ave offer loans to students in Caribbean American medical schools?
Unfortunately, no. The At the current time, we only offer to students who are in the you know what am I trying to say? The United States, the contiguous like states, basically, but not Puerto Rico or the Caribbean.
All right.
Yes, good question though. Thank you for
Yeah,
asking.
that was all of the questions are great. So thank you to everyone for submitting your questions and thank you for being here this evening. Don't forget to follow ASDA on Instagram to find all of the latest ASDA happenings and event registrations, webinars like these. You can find us at Dental Students on Instagram. Thank you so much to Kat and College Ave. Thank you to everyone for being here this evening, and we will see you next time. Bye, everyone.
Thank you. Bye.
Thanks, Kat.
You're welcome. Have a good night.
You too.